So I'm sure a lot of you are absolutely shocked to see the thumbnail of this video that I'm going all in, but stay tuned. I will explain in detail in just a moment's time. First and foremost, let's get straight into the chart. So as you can see over here with crypto bubbles, the bounce does continue. I will cover the low time frames towards the end, but I'm very excited to share with you some of the charts that I outlined over the course of yesterday. They are high time frame. I had to go on the BLX, which is the BraveNewCoin liquid index for Bitcoin. Essentially, it aggregates all the different pricing for Bitcoin since the beginning of time. And they've got history from as early as the 12th of July, 2010. There is no chart that goes back further than this one. So I've outlined the way that these market cycles work and how you could potentially buy the bottom, or if not the bottom, but very, very close to the bottom. So this is the first time that I'm doing a video like this where I'm pretty much outlining my exact buying strategy. So without further ado, let me explain and let's get straight into it. First and foremost, I have a couple of different vertical lines that you need to focus on. The red one marks the all-time highs from the previous cycles. And the reason why is because, of course, we want to measure from all-time high back down to the bottom. How long did that take? What was the difference in price? And then I've also marked out the different halving events that have happened throughout crypto. And you'll see some very interesting patterns that unfold within this. So all-time high of the first cycle, which was in 2011, all the way back down to the bottom, was 93.5%. It took 19 weeks. So we have 19 bars. I am on a weekly chart over here. And then notice this, if you mark out 1 year before the halving, pretty much this is 1 year before the halving. The green bar over here suggests the halving event. Let me know in the comments, can you see the vertical lines? I hope that it's clear enough. I know on a mobile device it might be quite small. What I will do after the show is I will make a tweet thread and I'll post all of this over there. So all I want you to notice over here is the bottoming pattern. This is typically the way that you would experience a bottoming pattern. Look at the dash line over there. It kind of curls through like this. And you form a base for a couple of months. So that base is formed 1 year out from the halving event. Just before the halving, we've already, let me repeat that. Just before the 1 year prior to the halving date, so just over a year, is most of the time where we bottom. Once the halving happens, that's usually when Bitcoin price starts to go parabolic and the new cycle begins. And as you can see over here, we go up, and bam, then we hit the next all-time high. So again, this is now 52 weeks after the halving cycle, almost exactly 1 year later, you hit the all-time high. Now you take from all-time high back down to the bottom. That's 59 bars. So 59 weeks with 86% drawdown from top to bottom. And you don't need to memorize all these numbers. At the end of this video, I will summarize it all. I've written it all down. I'm just wanting to walk you through this so you get a little bit of an understanding. Okay, so now you've made your bottom 59 weeks later, which is just over a year later. And as you can see again, rounded bottom, and then the halving comes over here. 1 year before the halving, we've already hit our ultimate bottom, and that's when things slowly start to grind and pick back up towards the upside. By the time you hit the second halving event, for those of you who don't know what a halving event is, it essentially relates to the Bitcoin miners. The mining reward or the work output gets halved every 4 years, meaning you get rewarded less Bitcoin for the same or even more work output. So you can do your own research on that. But halving 2 hits and off Bitcoin price goes. It takes off in a monumental upside move. Let me just turn that sound off over there. And there we go. We make our next all-time high. And that is 74 weeks later from the halving event. It takes 74 weeks to hit the next all-time high. So a little over a year. Then we go from all-time high back down to the bottom, which was, call it the 20,000 mark, all the way down to 3,400. That is a negative 84% move, so an 84% drawdown, and it took 52 bars, which is 1 year, 52 weeks. you hit the bottom, and then look again, you have the dash line over here, which shows you that bottoming process. And this is what I want you to focus on, because this would be my expectation for this cycle as well. Okay, now you mark off 1 year before the halving again, and then off you go. You hit the third halving event and price goes parabolic and off it goes. Notice the long-term trend line on the bottom over here. And then from that third halving event, which is over here, to the next all-time high, again, 78 weeks. So very similar timing patterns over there, just over a year, and you hit the next all-time high. And that is where we're currently at. So the question is, how do you enter the market? Where would the bottom potentially be, and how long would it take? Well, this is essentially my answer to this question. The most probable outcome is that you're going to have a bottom formation that looks something like this. So I'll zoom in on this. Let's even make this chart bigger. If you take a look at that, this would be your expectation, which shows that we are pretty close to the bottom. Now, if you also mark out the long-term trend line over here, which comes all the way back from the start of the bull run in 2017, and you move that all the way across, and I have covered this before, that means your worst case scenario is price could come down as low as $8,700, depending on when it hits this line over here. If it hits it now, it could be just under $8,000. That would be one of my worst case scenarios. Is it possible that it could breach this line? Of course. Anything can happen within the markets, but we're just trying to come up with a game plan and play the side of probabilities for finding the best way to enter into the market. So what I've suggested, and because a lot of people have asked me, how do you enter into the market? So the aim would be, right, take 25% of your available capital and your dollar cost average in over the next 18 months. Why is that? Because if you start to dollar cost average now, over the course of 18 months, let's assume that we are over here. Let's say that we're somewhere within this region over here, and you now dollar cost average over 18 months, you are pretty much already buying the bottom and then going back into what should be the next uptrend. Now, no guarantees. I can't guarantee that this is the way the market will play out, but if the cycles hold true and things pan out the way that they have historically, then that would be the expectation. So you would be looking to buy from here, and over the next 18 months, so already there's 52, you've pretty much bought the majority of the bottom, and you're going to about here into the next halving cycle, you dollar cost averaging 25% of your capital. Now, a lot of people have told you to dollar cost average the whole time from there. And I am not one of those people. I've not done that. I've not dollar cost averaged myself over there. I've waited for the point of maximum opportunity, and the point of maximum opportunity is coming now. The other reason that you dollar cost average like that is because what happens if this is the bottom? What happens if I'm wrong on the curved line that I've done and it looks like this? Well, that would mean that at least if you dollar cost averaging here, you still have exposure to the market and you're going to experience upside potential as well. You're not losing anything. You're actually gaining. So it's a risk management tool that I do recommend. The other way is to enter 25% at key horizontal levels. What are the key horizontal levels? It's going to be $12,000. It's going to be $10,000. And then it's going to be as low as $8,000, which I'll show you on the next chart. That would be my strategy. You take the second 25%, you divide that by 3, and you enter those amounts bit by bit, which is what? It's something like 8% or so, 8% at each key horizontal. Now, what that means is within the next 18 months, you have 50% of your portfolio entered into the market. There is a certain level of technical analysis skill set that's required when entering the 25% at the horizontals, because you need to be able to identify how we get to those horizontals, whether we're going down in a fast capitulation type scenario, in which case there's a high probability that you bounce out of that zone, or if we stutter stepping in a slow, methodical way towards those levels, then it might mean that potentially things could bleed down even further and the market could get worse than expected. Okay, the last 50%, so 18 months from now, you have 50% of your available capital entered into the market. You're now leaving the final 50%, for an uptrend. Now, what you may find is that you start to establish a new uptrend. Let's say, for example, the market goes like this and prices are doing this. That means you may already start to enter your next 50% even before you finish your dollar cost averaging, which would be done by the time you hit the fourth halving event. So I hope that helps. Let me know in the comments what you think of that. Now, what are the risks associated? So there are definitely risks. The risks are that this time is different. This time is already different. We've taken out the previous all-time high, which we hadn't done on previous cycles. Price is also below key moving averages. If you look on the weekly chart, we've never spent this much time underneath the 200-week moving average or the 200 EMA on a weekly chart, which is now starting to roll over. We have regulatory headwinds, especially with everything that's happened with FTX. These are risks. We have recessionary headwinds because we are most likely going into a recession. We're pretty much already in a recession. They just haven't declared it yet, and that will have an effect. Then we have quantitative tightening that's currently going on. And most importantly, and what scares me more than anything, is that we are in an equity bear market. So S&P 500 stock markets are in a bear market. And the question is, how long could they remain in that bear market for? So with any trading plan, there are risks associated. But if you don't have a plan, you plan to fail. If you want to maximize your opportunity, it's all going to depend. You can mess around with these percentages according to your own risk profile. I'm comfortable with doing this because I'm young enough to be able to make it all back if worse comes to worse. If you are 67 years old and you are pretty much right at the end of your retirement phase, then maybe this is not a good idea for you. Then you need to work out your own percentages. So this is not financial advice, and I'm not a financial advisor. I'm just sharing my ideas and plan with you. So essentially what I'm saying over here is the different cycles from top to bottom. If you have a look at these averages over here, it's 93%, 86, 84. So the current cycle, I think we went down about 75%. First one took 19 weeks from top to bottom, then 59 weeks, then 52 weeks. So everything is looking still rather similar, although people are, of course, very, very fearful. Let's just mark off this exact all-time high. From there to current bottom that we've made, we've done 77%, and it's taken us 54 weeks. And I feel that's a safe enough area to now begin dollar cost averaging. I think that it's not a bad idea. I definitely don't recommend you do it with all of your money because you don't know what could happen next. Could the market go through this level? And could the next 10 years of crypto be a bear market? It's possible. It's possible. Anything is possible within the markets, and you should never, ever be too sure of yourself. So that's essentially my buying plan. I will put this in a tweet thread for you guys. I'll screenshot each section over there. But again, I want to go now zoomed in on this chart over here, which I have shown you before. So how do I believe the bottoming process will work? Well, I think that we've now broken clearly into this range over here. You can see that once we lost that $19,000 level, that was a key and pivotal level that has been totally lost. Now the question is, what next? And I wouldn't be surprised to see price come all the way down and tag this yellow line, which is that long-term one that I've shown you. And that comes down all the way, if it were to play out like this, in the region of $8,000. So speaking of those key horizontals, right? Key horizontal, you have the mid-range of this overall range is coming in at $11,500. Now, if you think of psychology, like human psychology within the markets, typically you go into extreme depression when you've lost all hope. And I believe all hope would start to get lost around 10 to 12K. I believe that most people believe already that there's a possibility that we could hit 10 to 12K. Maybe if you asked them 5 months ago, they would have said no way. But now that we're at 16K and we've even gone as low as what, $15,600, that's only $3,000 or $4,000 away, which means they've already mentally prepared for those levels. So what would happen if in a capitulation type event, price radically came down like that and dipped below all of these levels that nobody ever thought they would see again? That would create extreme panic and despair and depression. And from the Wall Street cheat sheet psychology phases, that is kind of what you'd be looking for. So I'm sure you can all see over here throughout the bear market, you go through complacency, anxiety, denial, panic, capitulation, anger, and then you eventually go into depression. I do think there's been a little bit of anger. Depression has only just begun. So that is essentially the buying plan. That is what I'm looking for. I don't believe that Bitcoin or crypto is dead. And I don't think that the bottom is in yet either, but I am prepared for whichever scenario, which is why I have an actual plan on how to enter into the market. So I think that brings us to the end of that section. Now into the more relevant topics that are happening right now. I wanted to show this from Michael J. Kramer. He says VIX to the VVIX ratio went through the lower Bollinger Band again today, and it has been associated with tops, at least that being tops in the stock market. So looking at the stock market, you can see we are very, very, very close now to that moving average of here. And as you'd all know, this is the area that I'm looking to short from. So you got about a 0.5% move. Potentially, you could even move about 1.5% upside to hit that trend line, which has held all the lower highs since we made the final one in January. And that would be a decent area to start to build a short from. If you are wanting to diverse your risk into other asset classes and you want to trade the S&P 500, one way that I recommend is on Prime XBT. It's one of the only platforms that are crypto and stock related. I will be taking the trade within this purple area. I have mentioned that to you guys before. I'm just waiting to look for weakness. There might be a little bit of an over-under scenario over here where price pushes a little bit higher up to about 4,110 on the S&P 500 and then starts to deviate back below those purple lines that I've drawn. That would be where I would enter the short. I will keep you up to date. If you do want to trade on Prime XBT, there is a sign-up link over here. You can get up to $7,000 if you use that promo code is Kyledoops. Now, another reason why I think that there could still be further downside is I don't think that the total 3, which is all the altcoins, has reached its ultimate bottom. Currently, we had a little bit of a bounce, and I did show this yesterday, potential that it could move up to about 387 billion, reject from that level, and then finally break this down. Eventually, I think it comes down to about 200 billion. And then that's where you can make your decision. If you have those favorite altcoins that you missed out on the last cycle, which you still believe have an extremely strong network effect and will last into the future, that might be a good time to place some small bets. If you were somebody that was looking to buy $1,000 worth during the bull run, now all you need to do is to get the same impact or effect. You can literally put in as little as $100 into some of those altcoins, very small bets, and you will have maximum upside opportunity when the market does eventually bounce. Daily chart, not much to add on here. Price stuck below all the different EMAs. Still pretty bearish, but after a big impulsive move down, you would expect a slight consolidation, some sideways motion over here, whilst the market tries to decide what happens next. And usually these consolidations lead to the next leg down. So for our chart, same thing, maximum upside, I would say, is going to take that to about 17,800, matches up with the 200 exponential moving average and the top of the range. Low time frame. Okay, this is what I'm watching on low time frame. Currently, price action is caught still within the range. The range low and the mid range has been the most interesting area, which I'm sure you can see is this zone over here. Now, this is how I mentioned to you guys to go long. I said watch for the sweep of the lows over there to take out the liquidity. So those stops get wiped. That creates an impulsive move to the upside. You have a deviation then back into the range. You break the diagonal support over here, which is this one here. So strong impulsive move. That triggers the long, right? Price then goes up and we're continuing to go up. Now, I've drawn another simple trend line over here, and I'll be looking for weakness into the mid-range. So if you see something like this, maybe you deviate above the mid-range, come back down, you break that diagonal. Once you break that diagonal, that's now the signal to get ready. You want to then take out the next, wherever that next higher low would be. So let's assume that it's over here. You want to take out the higher low, bounce up, set the next lower high. So you have a lower high over here. and then you have another one that happens over here, and that would be your signal to enter short all the way back down to the range low. Alternatively, what could happen, of course, is that this trend could continue up, and you could find that maybe price recaptures the mid range and then it finishes off at the range high, which is ultimately where I think that's as far as that this little relief rally goes, is into just above $18,000. So that brings me to the end. Very, very quick stream. I hope it was informative to you. That's my thinking. Pretty much with regards to altcoins, you can decide when Bitcoin does eventually bottom. I've shown you what to look for and what a bottoming process should look like. And I've outlined all the different risks involved as well. So you can make the decision on which altcoins you would want to get into if you do want to take on more risk for higher upside potential. If you want to play it safe, Ethereum and Bitcoin are probably still going to be around. Those are probably the safest bets. In other news, quickly to mention OKX, we do have the trading competition that has begun. This is the Soccer World Cup one. So you are welcome to join into my team. The link is below in the description. There's up to $2 million, which can be won. And then you can also claim your free NFT if you haven't already. There is a free mint. If it's already full, I'm not sure. If it is full, you'll see in the Google Forms, only 50 people can put their wallet address. You can sign up for the Web3 wallet over here. That will give you access to a free airdrop. If not, you can mint it yourself. Just pay the gas fee. And that's it from me, guys. Please give the video a like. I would appreciate it. Click the like button over there. Hit the bell notification and subscribe to the channel if you are not already. I will see you all on the next video. I'm not 100% sure if I'm going to be able to do one tomorrow, but if not, I will update you on Monday or on Twitter. Go through to my Twitter later on today. There's also a link below, or you can just, there you go, it's above me. Just type that in, exactly the same. Don't follow the scammers. I'll put a thread of that buying plan out on Twitter later today. So I will see you all on the next video. Appreciate you all. Have an absolutely fantastic day, and cheers for now.